Kyle, it is very good to see you. Today, we are talking about the relatively safe investment that is now yielding almost 10%. We are talking about Series I savings bonds, which I feel like everybody is talking about these days. They are connected to the inflation rate, which, Kyle, we've talked about this one before, recently hit 8.5% in March. We haven't seen numbers like that since the 80s. So let's break it down. What is an iBond, and is it a good investment?
Hi, Erin. Yeah, absolutely. iBonds are interesting. They've really hit the headlines, I feel like just a week ago. I actually had a couple people ask me about these directly. Really, they're just a security that's offered by the federal government that pays a stated fixed interest rate. But on top of that, it also pays an indexed rate for inflation, just like you mentioned.
Right.
And so these figures are calculated semi-annually. So every 6 months or so, you'll know what they're paying on that bond. In terms of, is this a good investment or not? I definitely think that's a situational answer. You got to look at the objective for the money and just understand it's a longer term investment, right? It's not a quick 10% by any means.
Right. Good point. And so just to lay it out, right now they are returning 9.62%, but there are a lot of limitations. We'll get into it. I feel like maybe it's a good option though for people who are generally invested in a savings account or a CD, because those rates are currently averaging 0.06 and 0.15 respectively. So who is an iBond a good option for, and who shouldn't even be looking at it?
Well, I think that let's address limitations for sure. And
Yeah.
with the iBond, what is it, 1 or 2 years that you have to hold on to the
Yeah,
iBond?
1 year at least.
Right. And then after that, if you go ahead and try to redeem it, you do have to surrender, I think, up to almost 3 months of interest that's
Right.
accrued on that bond.
Mm-hmm.
And then, there's no guarantee that it will credit much interest for all of time, right? So
Right.
it's a variable interest rate. In terms of for who this is a good investment, or when to really nail down on when it's a good investment, you got to think about the time horizon of the funds, right? If it's short term, stack it up against a CD, it's definitely attractive today. But you can also only invest $10,000 in one of these per individual, right? I mean, that's a pretty big limitation. So if you're a retiree or getting ready to retire, you have $500,000 portfolio, $10,000 is what, 2% of your overall portfolio?
Right.
It's not going to swing or change things really drastically at all. I think for a longer duration, inflation protection, top of mind solution, I think it's a good fit over, an excess balance in a savings account, particularly.
Right. Right. So I think what's interesting here is that everybody is talking about these simply because inflation is the story of the day. We're all looking for ways to beat it. The other thing that I hear come up along with these iBonds is tips. So how do these compare to tips?
Right. So tips are treasury, inflation protected securities, very similar. The differences with tips, if we hit a period of deflation, the value that you've invested into those bonds could actually go down if you sell it on the secondary markets. That's where most people trade them anyway. And the other thing with tips that you got to keep in mind is they're not designed to beat inflation, right? They're designed to try to keep pace with inflation.
Right.
So from our standpoint, we look at the longer term, right? And we look at a balanced approach to things. And so for us, long-term market participation tends to keep up with inflation pretty well, and so if you're disciplined and you've got a well-diversified portfolio, that, objective is really being met simply by just participating in the market over the longer term. And I feel like sometimes we hit these topical stories, with the iBonds, this month in particular, when people are overextended in the market. I think a lot of us have felt maybe a overconfidence with how things had gone over 2021. And now everyone's, desperately looking for a solution. This is a great reminder that balance, and discipline is a winner.
Yeah, well said. It's the discipline that is so hard for so many investors,
Yeah.
though. And you and I have talked about behavioral finance many times. Kyle, this was helpful. And I think it helps underscore the fact that people do need kind of a strategic approach to all this. So if they would like to talk to you about ways to hedge against inflation or even capitalize on these moments of uncertainty, what's the best way to reach you?
Best way is through our website, firstcoastfinancialgroup.com.
It is very easy. All right, Kyle, thank you.
Thank you, Erin.